Let's talk about two companies, two stocks that have been beaten down and then some. One stock has been beaten down more recently, the other one has been completely destroyed already in the last 2 years or so. Now, you know me, not here to waste your time. We're going to talk about Arista Network and Unity Software. But first, look at this. Beautiful, right? Beautiful green Monday. That's how we like to start the week. Beautiful green week. Nvidia up 3.5%, Tesla up over 10%. Must feel great. Even AMD is up 7.7% now at $114. So yeah, great start of the week. Now, before continuing, if you enjoy this type of videos, hit all the buttons, especially subscribe. We're trying to reach 90,000 subscribers. So if you're new here, hit that button. It's free, so why not? And if you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off here with Arista Network, ticker symbol ANET. It's trading now at $86.86. Arista develops, markets, and sells cloud networking solutions in the Americas, Europe, Middle East, Africa, and the Asia Pacific. The company's cloud networking solutions consist of extensible operating systems, a set of network applications, as well as gigabit Ethernet switching and routing platforms. Now, as you can see, throughout the last 5 years, it has had quite a lot of drawdowns. More recently, it has had a drawdown of around 40% or so. Right now, sits 31% lower than the highs that happened back here late January. Now, currently, it has a market cap of $104.8 billion. Now, from a PE standpoint, it's not the cheapest one out there. It's not the most expensive either. If you look at PE trailing 12 months, 37.3. If you look at the next 12 months, 33.3. So even with that pullback, you didn't really get a low like a 20 times forward PE or something like that. But this is a company that is quite profitable. I mean, free cash flow margin right now sits at 52.5%. Not bad. Expected growth rates for the next 2 years revenue, close to 19%, and EPS 14.2%. Now, if we look at some data from Census Bureau, you can see that US business plows cash into building data centers. If we look at data center and then you look at all the other things here, hospitals, schools, lodging, transportation, recreation, multi-retail. By the way, these are private construction spending for these select categories. Well, the big winner here was definitely data centers, which of course, I mean, Arista Network is a big winner in that. And now, if you believe that CapEx for data center build-out is going to continue to go up and is going to reach over $1 trillion by 2028 worldwide, according to Deloros projections, then you would assume that Arista is going to be a big winner for the future. If not, then not. It's quite simple. Right now, the average analyst price target sits 33% higher than the price we're at today. And if we look at the growth projections for free cash flow, we've seen revenue, we've seen EPS. What about free cash flow? Well, first up, fiscal year 2025, free cash flow is actually expected to be down 12.4%. But then look at its reacceleration, 19.8% year-over-year growth, followed by 27.4% year-over-year growth in fiscal year 2027. Not too bad. They generate, of course, the majority of their revenue in Americas. The growth rate there has slowed down, but it's still above 20% for the whole of 2024. Then you've got Europe, Middle East, and Africa, and Asia Pacific. Now, with revenue, you can basically split it into two segments. Again, one, the largest one, which is product revenue, comes at no surprise. And then service one. Service one last year was $1.1 billion. First time it passed that crucial $1 billion milestone. And that has grown, well, not as fast as product, but not far from it. Compound annual growth rate since 2019, 23.5% compared to 23.8% for product. If we zoom out a little bit, look at the overall revenue, we can see that gross profit margin stayed around the same, 64% or so. Free cash flow margin has seen a huge improvement in the last 3 years, right? In 2022, it took a big hit, 10.2%, then went 34.1%, and then in 2024, 52.5%. Now, yeah, big boost, but even if it goes lower, I mean, previously it was already above 30% or so, that's quite good. So Arista Network, yeah, maybe a forgotten name at the moment. And if we actually look at the stock, well, the last 3 weeks, it actually went under $80. It has seen a little rebound or maybe a little recovery for those that don't like to catch falling knives, as you say. Maybe this is the rebound that you were looking for, although we are now sitting just under that 20-day moving average. Let's see if we can go above that. The 200-day one sits at $94. So what do you think? Arista Network, do you own it? You want to buy it? It's on your watch list? Let me know down in the comment section below. Moving on to Unity, and that's truly a forgotten name. That's a name that I've held previously a couple of years ago that I've been talking about. Well, we did talk about a lot a couple of years ago. Lost complete interest after the circus show that we've had, well, since 2020 to 2022 or something like that, 2023 maybe. Horrible. Great company. They're very lucky that they operate in the duopoly. It's basically Unity and Unreal, and somehow they managed to screw it up. Now, like I said, they're lucky that they are operating in a duopoly, because that means that they can still survive and recover. Now, if we look at the stock, if we look at the drawdown here in the last 5 years, still down 88.7%. In the last 3 years, down 79%. Last year, 19.8%. And year to date, actually, if we look at that, it's still down 7.2%. Has a market cap of $8.83 billion. Of course, PE trading 12 months, there was no E, so there is that. Next 12 months, it's sitting at 34 times. So yeah, not the cheapest one out there. But then again, if there was no E before, that means that they're now reaccelerating and becoming a bit more profitable. Free cash flow margin sits at 15.8%, so still okay on that front. Revenue, don't expect it to explode. It's actually at 4% now for the next 2 years. And EPS is, well, still down. Now, currently, the average analyst price target sits 28.4% higher than the price we're at today. I just show this for the sake of this video, just because it's 28% higher than the price we're at today. Doesn't always mean that we're going to reach that or that it's going lower or something like that. It's just current state of what Wall Street thinks, I guess. Then, if we look at future projections, especially for free cash flow. So fiscal 25, free cash flow basically down to flat. But then we see 30.9% year-over-year growth in fiscal 26, then another 16.4% year-over-year growth in fiscal 2027. Now, of course, right now there is a turnaround story. There's a new CEO, and they are launching a new product, Vector. And Vector is supposed to reaccelerate the growth. So we'll see how that turns out. If we look at what has happened, of course, not great, right? Not great. We've had growth before, especially in Grow Solution. Of course, if you call it Grow Solutions, you have to grow, I guess. But Create has been, well, struggling since March 2022, has been declining at a compound annual growth rate of 2.8%, or has declined by 7.5% overall. Grow Solution did grow by 96%, but yeah, in the last couple of quarters, it did not grow at all. There were some restructurings, of course, there was also that acquisition merger, I would say, with Iron Source. Remember, before they did that, AppLovin wanted to acquire Unity. I think that would have been the better move here. Now, if we look at dollar-based net expansion rate, this is including Iron Source, it has come down quite rapidly. It has even gone under 100%, although last quarter we've seen a little rebound from 94 to 96%. Hopefully they can take it back over 100%. Looking at the remaining performance obligation growth, yeah, we've had that huge period where it basically exploded. Again, some changes with the business. If you look at the number of customers contributing over 100,000 of revenue, that actually did continue to grow, although didn't really grow that fast. Last quarter, RPO did go up a tiny bit after declining time and time again. We've seen the same thing here. Year-over-year growth for gross profit came down quite rapidly since Q3 2023. Last quarter, still down 5.4%, but we are seeing a small recovery there. And then as a whole, gross profit margin still close to 75%, free cash flow margin at 23.1% for Q4. Of course, if you take the whole year, then you're getting that number that we've seen before, around 15.2% or so. But if they can stay above that 20%, I think that's going to be quite good. Now, last quarter, they introduced Unity Vector, the company's new AI-powered ad platform designed to improve targeting precision and audience scale. The rollout will begin at the end of Q1, so probably now, and is expected to be completed by the end of Q2 2025. The CEO noted the iterative nature of the rollout and urged patience in seeing its full impact. The cancellation of the runtime fee in conjunction with the launch of Unity 6 has driven customer reconnection and accelerated renewals. Should be good for what we've seen, expansion rate. Unity 6 adoption is progressing well, with 38% of active users already upgraded and 2.8 million downloads since launch. As for the Q1 revenue outlook, it's projected to be between $405 to $415 million, with adjusted EBITDA guidance between $60 to $65 million. This reflects prudence regarding potential disruption from the Unity Vector rollout and seasonal factors. CFO highlighted that Unity will now focus on quarterly guidance due to the rapid transformation in its ad business. He confirmed that price increases in the Create segment will roll out gradually through 2025 and 2026. And so right now, if we look at the stock, we are exactly where all the moving averages are here. The 20, the 50, and the 200-day moving average, we've been there before. I mean, the stock has been literally around that 200-day moving average for quite a long time. Yes, it did go up sometimes, did go down sometimes, but now we're back here, $22.67. RSI is also very neutral. In my opinion, last quarter was really ground zero, let's call it. A full refresh, a full recalibration of the business, and then an announcement of a new product that should reaccelerate growth for the business. Again, this is a company that operates in a duopoly, and so if managed well, I think this can do very, very well for the future. Now, me personally, I only cover this for information purposes. It's not even on my watch list. It's on my, monitor list. If something changes drastically. It's an interesting industry, for sure, very interesting. Actually, I think they said that their revenue from the industry side did increase 50 or 55%, so that's their fastest growing segment. But yeah, I'll have to see, now we're in a prove it to me that you are worthy of an investment. So those companies, of course, if I had to choose between one or the two, I'd probably take Arista Networks for now, because it's it's a solid business, good execution, good management, very good momentum as well. So I'd probably pick that one. Let me know what you think down in the comment section below. Subscribe, all of that, and I'll see you all in the next one. Bye-bye.